Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Options, and I'll be facilitating this session tonight with Rob Roy. For those that have been around, this is nothing new. However, for those joining us for the first time, allow me to explain the format of this webinar. So first things first, our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. Alrighty, so for this session, we are live streaming to multiple different platforms. So for the general format, Rob's going to go through his presentation, go through some case study considerations, and with the time remaining, he's going to open it up to some questions. And so it'll be a combination from questions from the multiple different platforms that we're live streaming to. So keeping that in mind, the question portion is limited. If we don't get to your question, just know it has nothing to do with the validity of the question. We just only have so much time. Lastly, we have the chat window as well. So for any support related queries, I can handle in there. And for any interaction amongst other attendees, please feel encouraged to use that window. Just make note that by default for our Zoom audience, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the to at the bottom to everyone. And all right, to start out, we had a weird day today. It started with stocks were halted with the Dow quotes and that resulted in some pretty crazy looking charts. So market ended up finishing flat, but I'm interested to hear Rob's thoughts on that and interact with you all. So thank you for joining us for this live session. At this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
Hi, everybody. Thanks, Zach. Welcome to TradeFinder Live. This is your first time joining us. Welcome, and welcome to everyone that joins us each and every week. Zach mentioned that we are live streaming to many different social media platforms, more than I can remember. So welcome to everybody watching on those various different platforms. Kind of an interesting world that we live in today from a technological standpoint. Zach gave you a brief rundown, so we'll talk about it again here real quick. We'll look at the U.S. market and some international markets as well, because we have a lot of international viewers. We'll review any trade alerts that were sent out for our Elliott option subscribers at EWOtrader.com. You can see that. had a really good one this week, and we'll go through and review previous case study considerations from past trade finders, and we'll see if we can find one for tonight. Last week worked out pretty well, so hopefully you were following along with those, and whatever time's left, as Zach mentioned, we'll do a general Q&A. So that's it. I won't waste any more time going over that stuff, so let's go ahead and take a look at the chart. And yeah, not much happened after a really weird start. And of course, when the stocks are halted, issues with the Dow, the first thing that goes through people's minds is hacking. Did the Dow get hacked, etc.? It was just a technical problem, from what they're telling us anyway. But yeah, there's some really weird looking charts that open with big spikes to the upside, big spikes to the downside. So it's throwing everything out of whack from a pattern when you look at the patterns, because every chart looks like a flat line because it was so crazy volatile in the beginning. Not every chart, but a lot of them are. So a pretty weird day. But the market shook it off and had just a pretty flat day. You can see it's an inside bar, meaning the high of the day was lower than yesterday's high. The low of the day was higher than yesterday's low. Maybe that means something for tomorrow, or maybe it's just a rest day because we were just a tiny bit overbought. If we back up one day, you can see that on the high, there was not a lot, but a little bit of separation from the 10-day moving average. So a quiet day today, regardless of what the reason was warranted. We still have this qualified upward zigzag pattern. Boy, there was a lot of chatter on YouTube. If you're watching from YouTube, you haven't visited our channel, Elliott Wave Options on YouTube, please do so. We do a weekend update where we talk about a number of different stocks, the markets, etc., kind of a weekly wrap up, and talk about some economic news that may have come out during the week, etc. But a lot of people are thinking that there's no way we continue higher from here. You can read the comments for yourself underneath there, but that zigzag is still qualified, which shows a potential 100% extension up to 437. Now, the 61.8% is likely going to have some resistance to it, in my opinion. For one thing, we have some resistance right there around 410, and then the 61.8% level is not far away. So somewhere between 410 and 413, the market may churn a little bit, might even back off some through there because of multiple different areas of resistance on the move to the upside. So, man, pretty interesting. We probably should go ahead and take a look at the VIX. A lot of chatter about the low VIX, and that certainly comes into play. When you've got the VIX down here around 19, is that really conducive to the market continuing and moving to the upside? You know, we could break down, we could hang around 18 for a while. I don't know that we go a whole lot lower. There was some comments on YouTube that we go down to 16 or we break 18. I don't know about that. That would be pretty low. We are down in a lower area. So if you have a concern about the market, or if there is a concern about the market, the fact that the VIX is so low is a concern. But, you know, when the market rallies, oftentimes the VIX just kind of bounces around down at a lower level. It doesn't mean that it necessarily has to sprint back up to 35. And I would throw out there as a consideration, we spent a lot of time up in this 35 area for nearly a year, running up to hitting 35 a lot. So spending some time down in the lower end of the range, does that equalize that out? I think there's an argument to be made there. But certainly when you have the VIX this low, you want to keep an eye on that. And so when you're looking for bullish opportunities, just be wary of that, and perhaps maybe you step in and take gains a little bit quicker than you would have. But I do think there's opportunities out there to the upside. And again, we'll see if we continue to move higher up into this resistance area, or maybe that inside day means something for tomorrow. You know, the futures right now are down a little bit, but not much. So pretty quiet day. There was a massive buy on the close. There was imbalance, significant imbalance. So if you looked at a chart of the market right before or right at the close, it was a big spike to the upside. You're wondering what caused that. That's what it was. So those have to be squared out. So more people wanted to buy. So what happens? Price goes up. That's how the markets work, right? When people want to buy, price goes up. Because there has to be sellers. So if there's more buyers than sellers, the price goes up, because at some point you have to attract somebody that says, okay, well, I didn't want to sell at this price, but if we're going up there, I'll sell up there. That's how the market moves. And that's kind of why I'm such a big technical analysis fan. Yeah, we do like fundamentals. We like, if we're putting on a bullish trade, for the stock to have good solid fundamentals as a base, but we look at technical patterns. And that's one of the reasons why, because the market doesn't move. There's not a formula that says, okay, well, if you have X number of earnings and your multiples this is the price of the stock, and that's how it's going to move. It moves by people wanting to buy and sell. That's how the prices move. It's behavior of traders, and that's what LA Wave does. That's why we're big LA Wave fans. That's what it analyzes. So anyway, enough of that. We'll go ahead and take a look at interest rates. And you can see we have labeled the wave 5 because we broke that wave 3. Could we go a little bit lower? I think we could. We have a 61% wave 4 corrective move there. Normally that means a 100% extension. I don't want to see us go any further than that. You've heard me talk about this. We don't want to see rates go too low to where we're saying, all right, why are rates going that far down? Remember, prices and yields move in inverse proportion. The prices go up, yields and rates go down. So why are rates coming down when the Federal Reserve is raising rates? You can argue, well, they're near the end of their rate hike cycle, at least from what they're telling us. And so if that plays out, then the only other reason for rates to go down is because tons of money is moving into the bond market. And if it's moving into the bond market, that means it's not moving into the equities market, which would be challenging for the equities market to go higher. But also, why? What's the concern in the equities market? So all these things are playing into it. I wanted to show you the yield curve because it has flattened a hair, but not a whole lot. And I've already updated this. So you can see the 2 years come down, the 10-year ticked up just slightly. But we're still inverted, just not to the degree that we once were. So it's a little bit better, but still an inverted yield curve. That normally says a recession is coming. It was all over the financial networks today that the expectation is for GDP to be right around the flat line, maybe barely into negative territory. So people are still not looking for a significant recession here. So one of our subscribers had written in a comment today and said, hey, you guys have done your forecast for the past couple of years and been pretty spot on with black swans. What's your black swan potentially this year? And, it's a little tougher. I still think we have to keep an eye on China and Taiwan. Remember, black swans are unexpected events. So China and Taiwan, I think, is still something to consider. Maybe some weird thing comes out of China from a variant that's stronger than people expect because China's reopening and so many people are getting infected, et cetera. Just something weird or unusual would have to occur, I think. But if we had a more significant recession, if this many people are talking about a mild recession, if it got to the point where it was more serious, I'm not sure the market has priced that in. I think the market is kind of, at least with this upward move, is saying, hey, the whole soft landing thing and the recession is not going to be significant. I think that's probably of all the things the biggest concern, because I'm not really in the camp so much of this really light recession. I think the recession could be a little bit more than what people think, but I've been wrong before and I could be wrong on that. And so far the market is saying, hey, I don't think we're moving up like this if the market sees a real significant correction coming. All right, so looking at the dollar, I like the fact that the dollar has kind of eased off this vertical move. I like the dollar coming back down. As you know, for those of you that might be viewing us for the first time and haven't heard this, everybody else has heard it until they're blue in the face, I'm sure. I am in favor of a strong dollar, but not as strong as it got. So pulling back on the dollar is helpful to international companies. And, we have global economies these days. So it matters from the exchange rate. But I just didn't like these big, huge drops. I didn't like these vertical moves to the downside. I much prefer a 45-degree angle. But if we're going to stair step, that's not so bad. In other words, if we go vertically down, but then we kind of go sideways for a bit and then go down and then go sideways for a bit, that's not so bad. But I just don't want the dollar to start cratering, because then again, it's like, why? And we cannot lose with the amount of debt that we have in the US. We cannot lose the dollar as the last bastion of currency, the currency of last resort. We have to keep that, or we're in real trouble. And you could also argue on the interest rate side that rates coming down helps, that the debt doesn't cost as much, but it's, the debt bill is insane. Perhaps somebody will ask in the Q&A what I think about this whole political thing of raising the debt ceiling. That's something I just, to me, and again, I could be wrong, it's just my opinion, it's all political theater. They'll push it till the last minute. They'll make us think that they're not going to sign it. They all go through and try to work in, what they want out of a new debt ceiling agreement. And it's just political theater, in my opinion. And so I don't expect it to be resolved anytime soon. In fact, you're going to hear like Janet Yellen coming out saying, hey, this is nothing to play around with, and we don't want other countries to get concerned that we're not going to pay our bills. Are they really? Do they really think that we're not going to? This happens every single time. So I do think it'll be pushed to the last minute, even a couple days, maybe, past when the D-Day is, just to, really put a fear into Congress, et cetera. I don't know. I'm not as concerned about that as some other things. I just, as I said, think it's all political theater. All right, so let's look at some of the other markets on the diamonds. And, it's been kind of a move back, retaking of the guard, if you will, from the S&P. It's got a little bit better pattern here than the diamonds. So the diamonds may be stepping back a little bit after showing some tremendous leadership for, the last 6 months or so. Even to where we were saying, hey, is the Dow regained its status as that's the market to look at? When you're more conservative, of course it is. But if we're starting to add in some risk profile like we are with the Qs, then I think the Dow does take a step back a little bit, and pretty nice move here on the Qs. We've talked about this 260 level numerous times. It held that. It needed to hold that. That was really important. And we look at the 10-day moving average, still slightly overbought on the Qs. So another quiet day wouldn't be surprising, especially since we are in a little area here of potential resistance. We even go back here to this triangle. That was the point of the triangle going back to June, as you can see, before the upward breakout. And breakouts of triangles get retraced. So it got retraced. We based down there at 260. And, we talked about this, that the Qs would underperform as long as the Federal Reserve was raising rates. But then when the pivot comes and they look to stop raising rates, then that's where the fastest money is going to be made, because what's been the most oversold is going to rally back the fastest. So I think looking for opportunities in the Qs makes a lot of sense right now. Maybe not right now, because we are at this area of resistance. Moving up, getting up towards that 300 level would be pretty impressive on the Qs. And if we can do that, then I think we're probably pretty good to go up here to 320 if that occurs. So we'll see if we bounce around here for a little bit. You don't want it to break this 290 area right now, being just a touch overbought. Again, we've talked about this so many times, but when you break a major point of support, resistance, whatever, in this case resistance, and you're already overbought, tends not to hold. So you want to see a little bit of consolidation, let the 10-day moving average catch up, and then make a big run through there, and that has the opportunity to hold more on a break of resistance. So I think that looks pretty constructive. It could take off and run too, but I just think it's more conducive to lasting longer if maybe we're quiet for another day or two on the Qs before we tackle breaking above that resistance. And here we are back up towards that 190 area on the IWM. We got up there last week, backed off. Now we're right back up again, and that 170 to 190 range, which has been the trading range for a while. If we break above 190, then that becomes support, and we look to go back to the 190 210 range that we were in number of months ago before breaking down in here. So the Russell seems to like to stay in these 20-point trading ranges. That's what it's been doing for a while. So breaking above 190 again, then 190 becomes support. You can see it tried in August and it didn't hold. And we're not so overbought here. Almost a bit of a doji there, and kind of a not large or super well formed, but a little bit of a triangle here. So maybe another couple sideways days on the IWM makes sense before trying to break above that 190 level. I think all that plays in pretty well. Bitcoin has been pretty impressive on its move, in my opinion, in the fact that it's held these moves. So we had this big move higher. I know it doesn't gap, and I know it trades 24/7, but we had a holiday, and it looks when you have end of day data, there has to be a print, just like the futures, et cetera, even though they continuously trade. So the fact that we've moved up here without any sort of a significant pullback, we said if we got above 20,000, then the next look would be 24. If we could hold 20, well, we didn't even really come back and test that yet. I mean, what was the low there? 20,000. Okay, well, close, 2383, but didn't come out and tap the 20,000 level. And here we are, almost up to 24 now. Maybe we need to go sideways a little bit here. We've been overbought. We corrected it a little bit right through here and then took off again. So we're a little bit overbought again. And it's the same scenario here. You don't want this to try to break 24,000 right now, not when it's already overbought. Let's kind of consolidate here in 24,000 for a while. And if you've been with us, you know that the whole thing has been in steps of 4,000 on the on Bitcoin, and so then the next look is 28,000, and there's you can see where that was support back in May and June. So that's the next area of resistance if we get above 24,000. Once we get above 24,000, and we have a video on our channel where we did a couple weeks ago a webinar, and we had some chatter about Bitcoin and cryptos and the halving process that's expected towards the end of first quarter 2024. And historically, at least, Bitcoin has bottomed in the area of a year prior to that. So we're kind of a little bit ahead of that schedule, but certainly interesting that it's playing out along those lines. But Bitcoin, it really impressed me that there hasn't been more of a test back down to 20,000, and it may still come, and you may like, he jinxed us. But if you're long Bitcoin or the cryptos, then you've been pretty happy over the last 2 weeks with this break higher and the fact that it's been able to hold it. Looking at the EWA in the Aussie market, and we had talked about how we had gotten just kind of a little bit vertical here, consolidated some. Still a tiny bit overbought, but right in the tap box now of that. And that tap box stands for time and price projection within this Elliott software program. By the way, this program, people ask about it all the time. It's called Profit Source. You can find out more about it at hubb.com. To me, it's the best Elliott software program out there. It is programmed directly to Ralph Nelson Elliott's algorithm that he wrote. It's nobody's personal adaptation. There's a lot of Elliott software programs out there, and people kind of tweak it a bit. Put their own personal touches in it, but this is just pure Elliott, and that's what I like. So we're above this 24 level, and we've held it so far. So pretty impressive there to hold that move above the previous wave 3 there at 24. And again, now we're in the tap box, tiny bit overbought again on the high. So maybe a little bit of sideways move. I know when we were showing the XJO before, people said, can you show the EWA? Because it's easier for more people to trade. But then some people have wanted the XJO back. So we'll show them both for our Aussie friends. And you can see this move here, same thing. They were a little bit different before, where the XJO looked a bit more bullish than the EWA, but they're kind of in sync now, both in wave 5 patterns. Haven't quite gotten into the tap box yet on the XJO. I didn't like this vertical move, but again, it's held it. We've gone in this 45-degree angle. I'm still nervous about this. I don't like the vertical stuff, but moving above the previous wave 3 high and holding that, you gotta be impressed with that. And a test back down to that wave 3 high would make sense. We kind of went sideways for a day or two and then took off again. So again, I was impressed with that, but still a little concerned with because see what happened last time. This is what happens when you go vertically. Vertical moves get retraced. And so here we went vertically down back in June, and we turned and went right back to the upside. Here, vertically down, turn around, went right back up. So vertical moves get retraced. So that makes me a little bit nervous there on the Aussie market moving forward, because that's pretty darn vertical. So perhaps someday down the road, we're going to be talking about how it's come back down. But at least for now, into that tap box, and you almost kind of need to pause a little bit, I think, if you're long the Aussie market, and let it show you that it can break through that level. Looking at Canada, we're at a pretty good point of resistance here. The Canadian market has not broken above its wave 3 like the Aussie market has, and we've got resistance there at the wave 3. We've got resistance at the same level going back to August, and then back in May it was support. So pretty good area of support resistance here between 35 and 36, and we'll see if we can break through that level. As noted previously, the wave 4 held on at the very last fib level that it can hold, 78.6, so it just barely stayed qualified, but we're marching up, and we'll see when we try to take out that 35.5. That could act as resistance for a period of time as well. All right, looking at the INDA, the Indian market, moving back a little bit lower. Now, the Indian market had been the strongest international market for quite some time, but it has gone through some consolidation here. So we ran up towards 44, couldn't break it, backed off. We did hold at 41, which is an area of support. So it needed to hold there, because you can see, if not, there's a little bit of support there at 40, or we could have come down to test those lows at 39, but none of that matters, because we did hold 41 and bounced up off of it. With all major moving averages, 10, 30, and 50 converging at the same spot, breaking below that, that's not what you want to see. And if there's any follow through to that, then we might be looking at another test of that 41 level. So I think the next day or two, trading day or two on the INDA is going to mean a lot as far as where things could go from here. Looking at Germany, that's run up again, another one of these vertical moves, which make me nervous. And we're consolidating in that wave 5 tap box. So did everything we're supposed to do. Now we're consolidating. Can it go sideways and hold it? We didn't even really test the break of 26 when we went through it. We just went right through it. But this is kind of the same thing as we were talking about with the Qs. The German market has been horrible for so long. You've got a nice bid to it, and there's a chance with so many people short that were to get a nice rally back to the upside, and they've had that. So the German market's had that, and now we're at an area of resistance here. You can see as we go back to last summer, right in through this area here was a bit of support resistance, spring and summer, and now we're there again, and we're consolidating. So it's constructive that we're consolidating this move without a big give back. Wouldn't be surprised to see it come back and test 26. So it's just the thing about the international markets that are the most concerning, I think, are some of these vertical moves. And I think it's a little counterintuitive, because an argument would be, but those vertical moves are really strong, and that's impressive. And just vertical moves get retraced. That's one of the rules that I follow. I thought I'd look at the EEM, because a lot of you have been asking about that lately on YouTube, and we're up here towards 42, and I think it would be good to consolidate here for a bit. We're already extended, because we had a wave 4 that's right at the 38.2% fib level. So the extension based on those zigzag parameters is 61.8. We've already passed that. So we're looking to see if we can extend up to the 100% level, but we do have a little bit of resistance here at 42. So again, maybe a couple of sideways days, and then we try to break that and see if that wave 5 can extend up to the 100% level. It's quite possible, but been a pretty nice move for the month of January so far on the EEM. So that's international markets, the dollar rates, etc. Showed you the yield curve. So let's take a look at Trade Alert that we sent out, and this we looked at last week. This is one of our case study considerations that we said if NVIDIA triggered, then we added that one with MPWR. I'll show you that chart in a second. So just to show you, we did actually send this out. Once it triggered, we sent it out to our alert subscribers. This is what our website looks like at EWOtrader.com. When we send out an alert, all this information is there in the alert. The symbol is all designed to assign a trade ID. So the strategy, it was a long call. It's in our impulse strategy, which is our directionally based strategy. You can see it was the April 2:15 call. It was sent out on Friday as we were breaking back up after. So we had moved. See, there's that vertical move. We came back down. So we had corrected the overbought condition away from the 10-day moving average. And you can see that there's a wave 5 up there around 200. And we didn't wait that long because we got a really nice move basically a day later. So technically 2 days in there because of the timing, but since it was more than 24 hours, then it counted as a second day, but really a day and a half, if you will. 88% return, $420 profit on this call option in 2 days. How about that for a nice return? That's people like that when you get those big returns in a short period of time. But we didn't hit 200. So why did we take it off? Because we did close that one out. And that's because look at the significance of where we were from the 10-day moving average. We're overbought and we're right at the previous wave 3 high. So that acts as resistance. So this is the second time we've had an alert, bullish alert that worked well on NVIDIA, and we may not be done here either. It's still on the radar screen. If we do some back and filling here, allow the 10-day moving average catch up, is kind of a quiet day for NVIDIA today. So a few more of those, let the 10-day moving average catch up. Same scenario here. You don't want it to try to run and break this wave 3 when it's already overbought because it tends not to hold. So we had that nice move up. We wanted to go ahead and take that with the potential resistance there right in the 190 area. So if we back up, come back down towards the 10-day moving average or consolidate here underneath this 190 level at that previous wave 3, we'll look to do this one again with that wave 5 target. So worked out really well. We may not be done, so we'll see, but just 88% in a day and a half, you're going to take that, especially when you have potential resistance and you're overbought. So wanted to share that with you. If you're looking for something that does more than what we do here at TradeFinder, where we identify case study considerations and then leave you to it. At EWOtrader.com, we send out alerts for entries, any adjustments along the way, and exits. So we kind of hold your hand from beginning to end there on the alert, rather than just saying, hey, you're on your own and do what you want to do. But looking at, there's a few that you might consider still open on our previous case study consideration. So this is MNST, so Monster Beverage here. We first looked at that one back on 11/22. So if we go back to, that's where we looked at it. And so we said that as long as we hold 100, and it has. So it broke it a time or two, but never with a follow through day. And now big move back to the upside today. So nice move there. So we're basically where we were on the entry now. So we've consolidated for a while, and perhaps it makes a run at breaking that wave 3 high. We look at the 10-day moving average, you can see that we traded below it. So you can't call this overbought, even with a nice big day to the upside on Monster. But holding 100 and consolidating there and then breaking from that, that's pretty strong. Held the 50-day moving average, as you can see. So I think you give that one a little more time. And then Netflix that we looked at here on the 13th of December. And you can see that, and it backed off, but not anymore. So we're going to cross that one off. If you're still in this one, you're being greedy now. So we're going to take that off the list and say that that's a winner. And like I said, if you're still staying long this, you might be being a little bit greedy. So pretty vertical move off of the earnings, and we're a bit overbought right now. So we're trading outside the tap box. So we've exceeded the wave 5 target here. Once again, 38% wave 4. So 61.8% is the extension. But if we go to an extended wave 5 and try to go to that 100%, you don't really want to do that right away, because once again, vertical here, overbought. Let it come back a little bit. Let it go sideways some back and filling here. Let the 10-day moving average catch up, and then see if Netflix can run some more. But from when we looked at it, that was a great trade. We had a little bit of a pullback in between. We said if it held 280, stay in it. It did hold 280 and took off. So the patience was rewarded there. And I think that's a good learning thing with these Elliott wave patterns. Never did the pattern change. Never did anything relabel. Never did it change from a wave 5 impulse pattern to the upside. Markets move in impulses and corrections. So we had a bit of a pennant pattern there. We broke out, but we held the important level and we ran back to the upside. So patience very well rewarded there on Netflix. Looking at Abbott Labs, we looked at this one on the 10th of January. And so kind of in this sideways move here, if I take this off, you can see that there's a big zigzag pattern here. And that was the target that we were looking at. So up towards 117. So we're moving up, but consolidating as we go. So we made a big move. We almost got there. So I think if you want to hang in there a little bit longer, you could on Abbott and see if it doesn't go up and hit that 117 level. Most of the time, these fib levels actually get hit. You can see we had a big move here back on the 11th, the very next day, but coming back here. So if you wanted to kind of hang in there on that one, I think you could do so. And then last week was a great week. We had MPWR. That's what it looked like last week when we looked at it. And did you see it? Boom. I hope you followed that. Look at yesterday. Look at that move yesterday. 30 points yesterday. Nearly an 8% move yesterday. And now we've hit the wave 5 target. So once again, if you're following this one and you're still in it, you're being greedy. So we're going to cross that one off as a winner as well. And then I already showed you NVIDIA, which we said if it triggered back to the upside from its overbought condition, we'd get in. It did. We sent that out as an alert to our subscribers. So we don't have much left to look at as far as reviewing previous case studies. So hopefully when you're viewing TradeFinder, you're following along with these alerts, and you can go back and look. We've got all of our TradeFinders historically posted on our website, and you can see that our track record on these case study considerations in TradeFinder has been pretty darn impressive. So if you like that and you want the alerts, then visit our website and see what we offer there. See if there's an alert. We have different kinds of alerts for different strategies there, and maybe there's something that you like. We've got one that's AI infused. It's a time strategy. You don't get these big massive moves in there, but it's good solid income type strategy. So I invite you to take a look there and see what you might find. But that's it. There's nothing else to look at from previous case studies. So let's see if we can find one that comes even close to what we found last week, which was 2 for 2 big ones. So let's look at the U.S. market here. And there's 5 here in the impulse stocks. So let's see if there's something that isn't that interesting. 2 home builders here that are in this area. I think that's pretty interesting. And then we have U-Haul and Winnebago. And then a financial. So pretty interesting list there. Well, U-Haul must be, is that a new listing or did it change exchanges? We don't want to mess with that. We have to go back and see if that moved exchanges, and that's why it only has such a short amount of data. That's usually what happens when that occurs. So on Winnebago, let's see what the DMI looks like here. And so moved up, came back down. That one's That one's pretty volatile, isn't it? I don't know about that one. We're at some significant resistance here. I think that if it can break 64, then you may be onto something. We need to get that ADX to curl back up again, because the two directional indicators crossed, but then they reverse crossed again. So the bulls are back in control, but for me, I'd want to see it break that 64 level before we started looking. It's not in a 5-wave pattern, it's in a corrective pattern. And if you wonder, there's tools there where you can draw the corrective patterns yourself, which is what I prefer, or you can turn them on here and it'll draw those ABC corrective patterns, flat zigzags and triangles for you. So let's go back and see what else. Let's see what one of these two home builder. We did Toll Brothers back on the 20th of December, and man, I couldn't figure out why that one worked so well, but it did. And then now we got two more home builders here, and man, if that DMI doesn't look pretty darn good, this is one of those things where you got rates moving up. The long end has turned down just a little bit, but that's not suggestive of a significant recession, is it? If you see the housing market start to come back, the housing market has not been good for recent times when the rates started going up, but is it coming back? It sure looks like it from this chart. I mean, it's hard to argue with that chart, and it's in a wave 3 to the upside with a potential target right there around 40. So if you're wondering how you do this, these are projections, the 4 and the 5. This does not say that we're starting the wave 4. This says if the wave 4 were to start now, that's about an area that could find some support. And then for some reason, there is a price target within the algorithm that's saying up around 40, 41. And if you don't go through the wave 4, then that's where the wave 3 tends to go. So when you're in a wave 3 and you're moving up, then you can kind of look at where this projected price was for not just the wave 5, but where the 3 could find some resistance, because the algorithm is finding that for some reason. So that looks pretty good. Again, I don't get it. That's why I like to trade technicals, because if you try to make sense of things, often the market does things that doesn't make sense. And to me, this is one of those right now. But the technical pattern doesn't look much better than that. Let's see what the Horton looks like, DHI for DI Horton. And a doji there today, so that's a little concerning. The DMI is not as strong here because the positive directional indicator just now broke above the ADX. So having the ADX outside the positive directional indicator was telling you that the strongest part of the move might have been over, and then this doji is a little worrisome, I think. It's also in a wave 3 though. And so, the same thing holds true with that potential wave 5 target, but I sure like the chart of KB Homes a lot better. So, I don't know. We'll see how it works out. I didn't believe the Toll Brothers one back in December, and that one worked. And you can make an argument that things are a little better now than they were back then, because the long end, the rate curve has come down a little bit. So for 124 today, we're going to make KBH our target up to 40. So let's see if it does it again. It surprised me again. So I learned a long time ago, the market is smarter than I am. And the worst time I ever had as a trader was, business degree, took economics, felt like I, had a decent understanding of economics, take micro, macro, all that stuff that you take in school and everything, and then learning the markets, getting an idea of how they worked. And I got to the point where I gained a lot of knowledge, and then you start thinking that you can predict where the market's going to go. Now, these are days before I discovered Elliott Wave. I've been trading Elliott Wave since 2001, but this was prior to that. And you start thinking that where the market's going to go, because you look at the economics, and everything else, and you think this is what should happen. Well, the market rarely does what should happen. And so I found out that the market doesn't care what I think, and it doesn't care what you think either. Market's going to do what the market's going to do. And what Elliott Wave did for me is it showed me in a way that I could understand it, what the market's doing and what the market is doing, and then likely to do from here. Nothing's 100%. Elliott Wave's not 100%. It's wrong sometimes. Nothing's right 100% of the time. But to me, it's the best technical indicator that exists. And I've been doing this for a very long time now. So I'm going to go with what I think's the best. And historically, this has been it for me. So, all right. So Zach, right on time here. We'll do about 15 minutes here of Q&A, and in the past, when we've had more case study considerations to go through, we haven't had as much time left for Q&A. But with all these considerations that have been working so well, don't have to spend as much time on those. So I'll turn it to you.
Absolutely. Yeah, well done there. And thank you for a great presentation. I just would also like to remind everyone that's joining us for the live stream to go ahead and smash that like button if you've enjoyed the webinar so far. So
yeah, thanks for that. We do appreciate that. You know how all this stuff works. It's helpful, and we appreciate it.
Absolutely. So we're going to start out with a question here from Callie.
If you don't like it, don't hit thumbs down, though.
Yeah, just a one-way road there.
Just hit the like button if you like it.
Yep, absolutely. All right, so we're going to start out with a question here from Callie on YouTube on your thoughts on BABA.
Oh, yeah, that's I've seen some commentary on BABA over the last few days with the reopening in China and stuff. It's had a really nice run. That move from 90 to 120 was really impressive, but now it's got some problems. It's got resistance right here at 120. It's still in a wave 3, so some sort of a wave 4 pullback is warranted at some time anyway. You look at the ADX and say, well, look how strong that is. And it is strong, but the ADX has gone above 50, so it's extended, and it's above the positive directional indicator. The two directional indicators are coming back in. So what this is telling you, it doesn't tell you that the move is over. It's telling you the strongest part of the move is over. Now, if the ADX were to break back below 40, well, then that's telling you that this run is over. But it hasn't done that yet. It is curling down, but it has to break back below 40 for that signal if you're a fan of the DMI, which I am. But it is telling you caution here. The strongest part of this move is over. It could go higher, but it's got to break this resistance area first to do that. So could it drift up to that wave 5 target? It could, but it could also pull back at some point and look to create the wave 4. So I would be a little nervous on this one. I would personally want to watch this. It is positive that it tapped the 10-day moving average on the low, which was the open, and then traded higher and closed on the high of the day. But again, it's right at resistance. So it was an impressive day today for sure. But, it's got some, it's got a little bit of headwinds there at the 120. It's bumping its head on that ceiling there. And then the DMI showing that the strongest part is over would be a little concerning. However, with all that said, if it can get above 120 with a follow-through day, it's probably going to that wave 5 target. But for me, I'd want to see it break 120 first. So, all right, I'll try to stop with the long-winded answers so we can get to more questions.
No worries. I'm sure everyone, including myself, is just fine with those long-winded answers. They go a long way. So we're going to go over to a two-part question here from George on Zoom. First one is just a general question that maybe some others are wondering. The time and price projection box or tap box, could you explain the time portion?
Yeah, there is a factor within Elliott Wave for time forecasts as well as for price forecasts. I don't talk a lot about it. In the past, I really like to look at zigzags. And so I like to look at when the zigzag pattern is uniform. So, I mean, the zigzags, they do this. So you got an angle here, and then you get a correction, and everything is just kind of uniform the way it looks. And so I use that kind of as where my time estimate's going to be. if you wanted to use this time estimate, then you would say, okay, the outside date is the 30th of March. So if you're looking to buy calls on Alibaba, then, following options rules, knowing that the last 30 days has a lot of time decay, you would pick April or May options. If you pick April, it doesn't quite give you 30 days outside the target, so you might even look at May from a time decay standpoint. But I tend not to look as much on the time forecast. A lot of people do, and there's tools in here that are focused on time. I don't have them in my favorites because, again, I like to look at zigzags. I don't trade the 5-wave pattern as much because they take so long. Not meaning that I don't trade the wave 3 or trade the wave 5, but it's like I don't put on a position here and then wait for it to go through the wave 4 and then go to the wave 5, that kind of stuff. Try to be a little more short term than that. So that's the way I go through and forecast the time aspect of it. But Elliott Wave does analyze time, and it's analyzing, all right, how far has it gone? What amount of time did it take to do that? And it's in the algorithm where it comes up with a time forecast as well. So that's how that works. But if you wanted to really delve into the time aspect of Elliott Wave, I'm probably not the person to listen to on that, because as I said, I've never really focused that much attention on the time aspect. The price aspect, big time, but from the time standpoint, I'm looking at these zigzag patterns, and again, drawing conclusions on the time frame based on keeping a zigzag that's somewhat uniform to where it's moved in the A and B waves.
Very well. Thanks, Rob. So the second part of George's question is just your analysis on CPRI.
Capri Holdings, haven't looked at that one in a while. And it's smashing, because people like to say smash the like button. Is smashing this wave 5 target here, right there in the 65 range. So we got inside there, and we have the same kind of issue here with the ADX being outside the positive directional indicator. It did tick down from 40 there, so I'd be a little concerned on much more upside from here. It is positive that it gapped down and it immediately filled the gap. Gaps get filled if you've listened to any of our stuff in the past, but to do it right away like that is a bullish sign. But we're at the wave 5, and the ADX, again, is telling you the strongest part of the move is over. Could it drift higher from here? Yes, but is it going to run higher from here like it has run from 55 up to 65? I don't think so. Perhaps, less of a 45-degree angle, more of a drift to the upside. Now, the top part of the tap box is up around 68, 69, right in there. So could it go a little higher? It could. But this is saying unless that turns back up, but the ADX already got above 40. So I just don't see a real strong move higher from here. Any upside, I think, would be more of a drift. And I think you want to, not saying don't go long on it, but be cautious.
Very well. Thanks, Rob. Next up, we're going to go to Rajiv from YouTube, who would like you to look at BKNG.
Bookings, the old price line. So, and that's impressive. Again, that doesn't look like we're going to go into a significant recession, does it? People traveling, stuff like that. So that's a really impressive move. Now here, a little different story. Okay, the ADX is above 40, so that's a little concerning, but it's still moving up and it's still underneath the positive directional indicator, which is still going higher. The negative I see here is that we're just a tiny bit overbought, but not a lot. And that's why we closed on the low today, in my opinion, because on the high, it just got a little too far from the 10-day moving average. I think this one has a really good chance of the wave 3 running up and hitting this wave 5 target. Maybe a day or two of rest. That would be to see how it went sideways here and allowed the 10-day moving average to catch up. That's what would be ideal right here. My opinion is that it goes sideways for another couple days, let the 10-day moving average catch up, and then perhaps we run up to that wave 5 target. But that it looks like we're not done going higher on that one.
Very well. Thanks, Rob. Next up, we'll go to Lisa from YouTube. Would like your thoughts on SLV.
Oh, good on you. Meant to talk about the metals earlier and I left those out. So some nice consolidation here. Gold's had a good run, silver's had a good run, and yesterday was a little concerning with this break back below the 30-day moving average, but getting back above it, I think is pretty impressive. So if you wanted to be conservative, let it get back above 22. But this is a nice consolidation area through here. The DMI, when you do this, it just comes together here, and it's like, all right, we're going to wait for the next impulse move to give you a signal here on the strength of the move. There's no strength to a sideways move, so the ADX dives down. It would be better for me if the ADX got a little bit lower, like how it did back here when it came down and got below even 13. So see that consolidation right through here in October with the low ADX. Now it's ready to run again. When the ADX gets low, it tells you the consolidation is likely coming to an end in the not too distant future. And you can see the trading range that SLV was in for quite some time. And then the ADX starts to move off those lows and it takes off. And so when you're looking at it here, I would prefer to see the ADX a little lower. What does that mean? It means that we may not be done with this sideways churn yet. That's why I'm saying I would like to see it break above 22 first. But if it does, then I think 24 is in the cards there at that wave 5 target. But the ADX being just below 20 is suggestive of there could be more sideways consolidation first before we run again. But if it breaks above 22, then forget that. That's your signal to go long.
Thanks, Rob. Next up, we're going to go back to Zoom for MD. There's a question here on ENPH.
We get this question fairly often on ENPH, and we're in this wave 4 here. We broke below this low and sitting right on the top of support. So this one, if you wanted to take a bit of a, well, I'm not sure if the person asking is wanting to go long or short here, but if you wanted to take a bit of a speculative move, we're at a pretty extended, 70% wave 4. So we came off this 61.8% level, bounced up, but it hit its head immediately on this next area of resistance, and it couldn't break above that. So now we're back down here, but there's a lot of support there from the summer. And so again, it'd be a speculative trade because it's below the 10-day moving average, but the potential to bounce back up again and try it again, just like it did a few weeks ago or a couple of weeks ago, is there. But if it breaks below 220, then it's like this, Zach. It's not quite Katie bar the door, but it's got some problems to the downside if it can't hold here. There is a lot of consolidation through around 200, and you could make an argument that maybe you could find some support there. But I think it brings 160 into play if it breaks below 220 with a follow-through day to the downside. So that's, you're right at your stop. So if you wanted to try a speculative long position here, if it breaks below 220 with a follow-through day, then it's a quick out. You're done. But you might be able to catch a bit of a bounce from here off of this support area. But that's a tedious one there for sure.
Yes, indeed. And just wanted to note that my Katie bar the door tally has increased a bit for this year. Still keeping it running so far.
Okay. Yeah, that one, that's not so much of a Katie bar of the door because there is some support on the way down, but it would be scary if 220 doesn't hold.
Yeah, I guess that one falls in the maybe category.
Maybe, yeah.
Next up, we will go to YJ from YouTube with your thoughts on ZIM.
Good old Zim. Well, it went through a lot of consolidation and tried to break higher and it couldn't do it. And then we gapped down and now it's had huge consolidation here at 17. So this is another one of those that you wanted, if you wanted to take a bit of a speculative trade on, this is kind of close to that launchpad effect where maybe we can build from this area of support and move higher. We still have this gap to fill here, and resistance is not until you get near that gap right there around 22-23. So a couple points to the upside possibly there. It does look like the DMI is trying to set up, but it's not there yet. The ADX is below 20. It's got to break above 20. So if you want to be more conservative, let the ADX break above 20 and keep the separation between the two directional indicators. And then I think you have a really good look at it moving up there. But if you want to be more aggressive, you are above the 10-day moving average. It looks like the 10 is trying to break back above the 30, which is a bullish sign. So you could be very aggressive and try it now. You're okay even if you come back down to 17. It wouldn't be fun in the trade, but there's a lot of support there at 17. So even if it backed off a little bit, you could stay long there and see if if this one fails and it comes back and tries 17 again before it starts another bounce. But it looks like it wants to try to go up from here. So I think that could be a speculative long as well. So we looked at a few that they look pretty solid, and then we've got a few here that are, hey, you could take a shot at it.
Agreed.
All right, one more.
One more. I was going to say we're at that time. So let's see. We'll pick one here at random. Jeff would like to look at Wolf.
Another one we haven't looked at for a while. Wow, we're getting a lot of ones that haven't. This is good. So it's not the same old thing every time. So the wave 5, it looks like that wave 5 was done because it was right at 61% wave 5 extension there. We've broken back above the wave 3 high. This should go up to the previous wave 4 there. So it should go back up towards 95. You can see it made a nice break yesterday, gave it all back today. But there's a little bit of a gap there. So as long as we can stay above the 10-day moving average and hold 80, I think there's a really good chance that this goes up to 95. But if it breaks back below 80, then you have to take a look at, well, it might be coming down to make a new wave 5 low. Got some support there at 70. But if I would want to see that one hold 80. So if I was going long in this one, 80 would be my stop. So again, another one where you take a speculative shot at it, and if it starts to break down, you get out right away. So these speculative ones don't have a lot of risk in them, considering they're speculative trades, because you're sitting right on the area of support that if that gets broken, that's your exit. So pretty interesting charts. So thanks for coming up with some new stuff this week. It's always fun to look at some different stuff other than the same old ones week after week after week. So thanks everybody for joining us again, spending your hour with us. Time is the most valuable asset we all have. We very much appreciate when you devote some of your valuable time to us, and we do our best to make it an educational, informative use of your time.